Welcome back. You're watching Tokenomics, and let's now talk about India, where 5 lakh investors and FTT owners in India were impacted due to the crash in the global crypto market. India has about 25 million crypto investors, many of whom are calling for more transparency from crypto exchanges. So what will be the impact on Indian investors? For that, we are now joined by Vignesh Raja, Director of Business Development in Middle East and South Asia at Hedera Hashgraph, and Sidharth Sogani is founder and CEO at CREBACO Global. Gentlemen, hi. Thank you so much for joining us. Sidharth, 25 million investors in India. I mean, these are reports that are suggesting it, but there are 5 lakh Indians which perhaps held FTT as well. What is your sense? What is the confidence levels in India right now? I mean, you've written a report as well. What long-lasting impact do you see of FTX collapse?
Well, hi Manisha, thanks for having me here. Well, the market's going through a very bad situation as of now, because the world's number 2 exchange, FTX, collapsed. It's like, imagine NSC collapsed, right? It's that bad. So it's not the sentiment overall is not very good. What is happening with FTT right now? The token is having difficulty in volumes. The token prices have collapsed by over 95%. So all those who are holding these tokens, I think they are stuck with it now.
Oh, absolutely, yes. Vignesh, we've been talking about for a couple of years now that buy a token which has a use case, look at the technology evolution, look at the core business of the company, check out the developers. I mean, what went wrong here, would you say?
I think one is, I cannot comment about the token, but I would say the utility of the token is also very important.
Right.
And in this case, I was not sure about the utility of that particular token. And I think another part is, how the funds are being managed on the exchange between the Almada Research and FTX. So I think there was an issue there. And the third, I think I think these are the major issues: how the funds has been managed, and probably the utility of the tokens. We were not sure how they are, and moreover, there was no regulatory oversight. I think that was a major issue there.
Also, Vignesh, would you say that, as crypto were, as the conversation has been, that crypto perhaps can be a portfolio diversifier, that claim also really hasn't worked in the markets?
I would not say that. Again, we are predominantly there. We are an infrastructure player. There are top level crypto companies or tokens that is there that is showing value. But I think the problem here is the combination of fund management, and the problem is of centralized holding of the assets. I think that's where the issue is, and people are building fantastic use cases, distributed apps. So I think we cannot say that crypto is not going down. Crypto is bad, but I would say this news has affected the customer sentiments. And so far, what's happening? We could see a lot of customers from Web 2 to Web 3 transitioning. But now what's happening and now because of the news, there is emotional, disconnect between the normal layman people who are actually trying to adopt this technology. And I think this is a temporary phase, and this is probably a time where we all take a reality check, and the regulators come in to put in some real good process in place.
Oh, absolutely. Not just the customer sentiment. Sidharth, would you say that the investor sentiment also perhaps has taken a hit?
Yes, in the crypto space, definitely. I mean, we were all going through a bear market since last 8 to 12 months. We all were sluggish, going sideways. But an incident like this, I think was an eye opener. And previously, Sandeep rightly said, this is a cleanup of the system. But what had happened is, a lot of people were trying to, be capitalists here and use a decentralized commodity in a centralized manner. We always say, not your keys, not your coins. That means if you have funds in an exchange, don't trust an exchange, because it's not the first time an exchange got hacked, or it has been, gone out of business. It's been happening since 2013, in my opinion. Mt. Gox got hacked in 2013 when the market cap was not even $200 billion, and everybody who had crypto lost it. Everybody started saying Bitcoin is dead, Bitcoin is dead, crypto game is over, it was a bubble, and it comes back. Because whenever such incidences happen, it usually happens because of humans, because if you have money, you tend to exploit it, use it for, in not in an organized market, and not in an organized way, in especially an unorganized market like this, where regulators are having a really difficult time in understanding how crypto functions, because each jurisdiction, each country have their own issues. So people are having a difficult time. Now, what is happening is, I wanted to add the portfolio diversification point, which you
Sure.
guys just mentioned.
Sure.
Well, you have to diversify your portfolio depending on the market cap of each commodity or asset you are investing. You see, Bitcoin or crypto industry as a whole is just a $1 trillion market cap. Apple Computers is $2.3 trillion. Microsoft is $1.8 trillion. So if you are putting all your money in one asset class based on the market cap,
Right.
it is stupid. I mean, even I wouldn't do that. Being a maximalist, even I wouldn't do that, right? You need to be aware that you need to calculate that what is the market cap, how big is the what is the supply into the price, that gives you the market cap, right? So you need, same thing applies in the crypto space. Now the FUD happens here because if you issue 1 billion tokens and I just give one token to Manisha at $1, I have a market cap of $1 billion, and people are like, oh my God, it's going crazy. It doesn't work like that, because
Sure.
everything in this space, being a smaller market size, depends on liquidity. So, and that's exactly why FTX crashed. If you in a smaller market cap where majority players command liquidity, they back out, you're dead.
Well, yeah, absolutely. There's just so many learnings yet again from this one. And I take your word on the fact that, yes, this is a deep cleaning that yet again the market has seen. But if you were to leave our viewers with that one learning or way forward that they need to look at this space as, what would that be? What would you say, Vignesh?
I think just adding on to Sidharth's points, so you have to focus. I think the users or the customers have to look into the self-custody of their digital assets, and that is the way forward. Because even I think that's how it is. You should own your wallet and you should own your keys, and that's how it's going to be. So people have to start moving towards how can they own their assets. So use something like a hardware wallet, like Ledger or something like a MetaMask. Trying to use the self-custodian solutions is the best way to go about, and people have to start learning. And I think that's what's going to happen. And we also want to educate people about the importance of self-custodial solutions as well from our side. So in the applications that we work with.
Well, yes, self-custody, do your own research, read up, understand the company. Core technology is what you have to invest in. There are so many learnings that we have from the show today. Sidharth, Vignesh, as always, thank you so much for joining us today. Appreciate your time. And with that, it's a wrap on this edition of Tokenomics. Thank you for watching.